Major changes are coming out for investors. It doesn't matter if you're talking stock market, crypto, real estate. Today's video, I want to unpack everything going on that we need to be aware of and how it's going to affect our money. So what we're seeing right now with the overall stock market is that we've seen the U.S. stock market just close its worst day in over 3 months. And this has a lot to do with the fact there was new economic data that came out showing retail sales for the month of November. And in this data, we saw that U.S. retail sales fell 0.6% in November versus 0.3% expected. So it was much lower than people were expecting, meaning consumers were spending less money. In addition to this, we saw that weekly jobless claims fell as well from 232,000 expected, was only 211,000. And what we're seeing is overall across the board, the effects of inflation are finally starting to hit consumers, and they're not spending as much as they previously had during previous months, previous holiday seasons. And this is going to be seen over the next few months and into 2023 for companies on their earnings report, because if consumers aren't spending as much money, it could push the U.S. further into a recession and have dire impacts on U.S. companies. Not only this, but we've also seen that the Federal Reserve recently came out and said that they're going to be raising rates higher and longer than initially expected into 2023. They expect to raise rates to 5.1% next year, up from the previously expected 4.6%. And this ultimately just means that they think battling inflation, combating inflation, bringing it back down is going to be a little bit harder and more difficult and more time-consuming than they originally anticipated. So the other day I tweeted how Elon Musk could be the world's first trillionaire if he just monetized his memes, and I did this sort of as a joke, not knowing that there already is something that exists that pays you and allows you to earn money from memes. So I figured it's only right if I share it with you guys. It's called Yepp Memes, and it's the first app that pays you for making, watching, and sharing memes with friends. And to be honest, I was shocked when I found out this app was already ranked number 29 on the Apple Store. It already has over millions of downloads on the Google Play Store with tens of thousands of reviews. And the way it works is pretty simple. Yepp Memes shares with you 50% of all of its daily revenue, and you can earn by three main ways. The first is by creating memes, where you earn $1 for every 10,000 views. All it takes is really one viral meme to make thousands of dollars. The second is you can earn by just watching and using the app every single day. And the third is by inviting friends. You get $2 for every single referral you get. So when you sign up for Yepp Memes today, you'll get deposited at $10 into your account, 100 Yepp coins, and you can do whatever you want with them. You could shop in their in-app marketplace where you can get Amazon gift cards, iPhones, headphones, sneakers, many more things, or you can go ahead and trade your Yepp coins on Binance or Coinbase or many of the top exchanges. So if you'd like to be paid for making, watching, and sharing memes with your friends, definitely check out Yepp Memes in the description. But when we're looking at the crypto market, things are much of the same. A lot of drama there as well. While it's not directly related to the U.S. economy, there is a lot of drama that we need to unpack. What we're seeing is that Binance recently has been targeted by the FTX collapse. And what we've seen is that Kevin O'Leary, also known as Mr. Wonderful, came out in a Senate Financing Committee hearing for FTX collapse, and he had blamed everything on FTX collapsing solely on Binance. He said it was Binance and CZ's fault for collapsing, because if CZ never tweeted that Binance was going to be selling FTT tokens, then we wouldn't have seen this bank run where tens of millions of dollars and tens of millions of customers wanted to withdraw their funds on a single day. He said that the whole reason that FTX collapsed was because of Binance, and now Binance is a total unregulated monopoly in the crypto space. And this was seen with a lot of backlash because Kevin O'Leary was paid $15 million to promote and be a spokesperson for FTX. And a lot of people didn't like how he approached this, because he comes out and say that he lost all $15 million that he put on the platform. But the reality is he was never even putting his own money into it in the first place. The whole reason he was able to get $15 million from FTX was because they were committing fraud, because of all of the shady things going on with Sam Bankman-Fried and FTX. They would have never been able to pay him $15 million to be a company spokesperson, which are what we see major athletes get for contracts signing bonuses, for major sponsorships. Yet Kevin O'Leary was able to get this because of all of the fraud going on with FTX. So many people say that can't trust Kevin O'Leary anymore. He has lost all credibility because of promoting FTX. And now we're just seeing this battle go on between FTX, Binance, and Kevin O'Leary and CZ. Now I want to quickly talk about what's been going on with Cardano, because recently Cardano has seen major controversy in the media because Charles Hoskinson came out and said that making Solana a sidechain of the Cardano blockchain is a great idea. And he said this in a recent AMA where people were asking, what do you think about Solana? Solana's had many recent outages and crashes, yet it still has some utility in some solid projects. And he responded to this by saying that Solana could very well become a sidechain of the Cardano blockchain in the future if the teams were open to it, which he doesn't necessarily think. But he said the way this would work is that you could take Solana, replace the current consensus algorithm with something that is 25 times faster, doesn't collapse all the time, and ultimately make it a Cardano sidechain. He said Solana would then be paid to ADA holders to maintain it and ultimately to stake pool operators for the Cardano blockchain, but then Solana and Solana dApps don't have to worry about security anymore. They don't have to worry about reliability. They don't have to worry about outages because Cardano has never had that. And with Solana and other potential cryptocurrencies becoming sidechains of Cardano, it would solve a lot of security problems. It would solve a lot of reliability problems, and it would also make them significantly faster, because these are things that we can count on with Cardano, is that we have never had any major outages. We know that sometimes they take a little bit longer to develop and roll out products, but they are always very secure, and we've never seen any major issues on the Cardano blockchain. So now let's talk a little bit about what's been going on in the tech world, because there's been a lot of talk about this new software, new AI called ChatGPT. If you haven't seen it, ChatGPT is labeled as a Google killer, the first real competitor to Google in many years. And when I used this for the first time, it was insane. It blew my mind how crazy this new AI was, how much information it was able to process, what you could tell it to do. And when you're looking at this new software called ChatGPT, you could tell it basically anything you want it to do. You could say that you want it to write you a non-disclosure agreement for your company. Let's see. There. You see that? It starts writing it instantaneously. Takes a little bit of time to think, and just starts writing line by line a non-disclosure agreement. So this is something that is going to change the game for law firms, for any service business, because if you have this access at your fingertips where you can say, write a non-disclosure agreement, write a leasing agreement, come up with a recipe for making blueberry sushi. This changes the game for every single industry in the future. And as the software continues to grow and continue to learn, well, it's only going to get better. Right now, it doesn't have access to the internet, so it doesn't search the internet records for up-to-date information, the most up-to-date information, but over time, I expect this to happen, and I expect this software, ChatGPT, its AI and its capabilities to completely transform every single industry in the world. And if you're not already using it, you should be checking this out because it saves you so much time. Imagine if you are just starting a company. You don't have to pay hundreds of dollars in legal fees. You can have ChatGPT make you basic agreements, non-disclosure agreement. You could have it starting to make any sort of company documents that you need. This changes the game. Moving on, let's talk a little bit about what's been going on with TikTok. The U.S. Senate has officially voted to ban TikTok from all government-owned phones. And this is a big deal because there's been a lot of controversy over TikTok and security over the last few years, ever since TikTok has exploded. And now the U.S. Senate has officially and unanimously voted and approved a bill that would ban TikTok from government-owned and government-issued phones. Already, several governors have ordered their agencies to not use the app on state-issued devices as well. And over time, we will see how this plays out. But it's not a law yet. It is passed unanimously in the Senate. Still has to go to the House. Still has to be signed off by the president. But this is looking very, very likely that this could pass in the near future, or some version of this bill would pass in the near future. Let me know your thoughts, though, on TikTok, its privacy, its service agreement, because when you start digging a little bit deeper into TikTok's agreements, they have access to almost everything on your phone without you even knowing, and it's pretty scary. So, U.S. government trying to take some action, some precautionary measures and steps with that. Now, let's talk about Elon Musk, because Elon Musk has seen a lot of drama in the media over the last few months, and some of it's been good, but some of it's also been bad. And Elon Musk got caught up with an account on Twitter called ElonJet. ElonJet was a Twitter account and a social media account that tracked movements of his private jet. This is publicly available knowledge. Anyone can see this when looking at flight paths and flight records. But what recently happened is that Elon Musk had said just a few months ago that my commitment to free speech extends even to not banning the account following my plane, even though that is a direct personal safety risk. Then 1 month later, he goes ahead and bans it. So people were not happy about this because the flight information for his private jet is publicly available information. Anyone can find it if they look hard enough. And he had said that Twitter was always going to be recognized as a platform for free speech. He had said that specifically he would not ban this Twitter account called ElonJet, yet he goes ahead and does it anyways. His reason, and the reason why he said he had to do this and why Twitter did this, is because they changed their privacy policy to include posting information about people's current locations. It says that you can post information about your current location, but posting information about other people's locations that could potentially put them in harm is against Twitter's policies. So Elon Musk says now he is going to be taking legal action against the Twitter account holder of the profile tracking his private jet because it put his family in danger. And when you start digging a little bit deeper, it looks like they're grabbing at strings here. It looks like this event that happened with his family being put in danger had nothing to do with the account on Twitter at all. When you look at the information, what Elon Musk is citing and quoting as the reason for banning this account that tracks his private jet is that he said, last night, a car carrying little X in LA was followed by a crazy stalker who later blocked the car from moving and climbed onto the hood. Elon Musk says that it appeared that Sweeney's flight tracking account called ElonJet may have been to blame, and that he is going to be taking legal action against Sweeney and organizations who supported harm to his family. But how does an information in an account following flight information and flight status have anything to do with a car being followed in LA? And that's where people start to get a little bit confused, because ElonJet, the account on Twitter, had not posted in over 24 hours. They only post information about flights, yet Elon Musk is saying and blaming this account for the reason his son's car was getting followed. So that really doesn't add up, because they track completely different things. This account tracked his flights when the car was being followed, and the account that tracked his flights didn't post anything for 24 hours before this incident even happened. So knowing where this car was and knowing when a flight landed a day before are completely unrelated, in my opinion, and it would be very hard to connect the dots there as to how those two incidences are related. Now let's talk a little bit about a few more things with Elon Musk, because what we've seen is that Elon Musk just sold 22 million shares worth, around $3.58 billion of Tesla in the last 3 days alone, bringing his total yearly sales of Tesla stock to over $40 billion. This has concerned a lot of investors. Not only have Tesla investors been concerned that Elon Musk is putting too much time into Twitter, taking his attention away from Tesla, but we've also seen that Elon Musk said earlier in the year that he was not going to be selling any more Tesla stock. He said on April 28th that there would be no further Tesla sales after that day. There was not going to be anything more planned, yet continuously throughout 2022, he has gone ahead and sold more Tesla stock basically month after month. And this was no insignificant amount. This was over $3 billion worth of Tesla stock. And this could be a major concern for investors, because while Tesla has been continuing to grow, we've been continuing to see more deliveries almost every single year. We've continued to see factory output ramp up. Seeing that Elon Musk is selling billions of dollars of Twitter stock, $40 billion to be exact, in 2022. Seeing that Elon Musk is taking his attention away from the company, been putting a lot of his time into Twitter, and just seeing that he's been posting more on social media as of recently, it's caused a lot of concern for investors. Personally, I have been using this as an opportunity to buy Tesla stock, because I think Tesla is a company that is going to succeed long term. Even though Elon Musk is selling, the numbers and delivery numbers and factory output numbers for Tesla have been continuing to improve and get better. So while it isn't ideal to see CEO, founder selling stock, seeing him put time into Twitter and other companies, I still try, in my opinion, to realize the fact that Tesla is not just Elon Musk. Yes, it has a lot to do with him, but it's a multi-hundred billion dollar company that will succeed either way. And last thing I want to go over is going to be with the housing market, because recently mortgage demand in the U.S. has dropped 38% year over year, according to new reports from CNBC. And there's 3 specific data points that came out that you need to be aware of if you're a real estate investor, you're looking at buying a house, you're looking at the housing market in general, because we've seen that mortgage applications to purchase a home rose 4% last week, but are still down 38% year over year. The reason why we've seen mortgage applications rise slightly is because interest rates have come down for new home buyers. In addition to this, we've seen mortgage applications to refinance homes have dropped 85% year over year, and this has a lot to do with the fact, and 100% to do with the fact, that rates this year are significantly higher than they were last year. Now they're right around 6 to 7%. Last year they were less than 3%. So no one's wanting to refinance their home with a much higher rate. It just doesn't make sense financially when you're going to be at a much higher rate. You're ultimately just losing money. And third data point for housing market is going to be that the average contract interest rate for a 30-year fixed mortgage with a balance around $600,000 or more was at 6.42%. Like I said, this is significantly higher than it was last year, but good news is that we have seen these rates start to come down slightly. So ultimately, that's what's been going on as of recently. There's a lot of stuff to unpack in the markets, in the tech world, in the crypto space. So hope you enjoyed today's video, and I'll see you guys in the next episode. See ya.